All right, and we're live. All right, Kristen Gallagher from Edify. Thanks so much for joining me today. I'm really excited to talk with you about Edify, and I'm particularly excited because when I first saw your deck a few months ago, the simplicity of it and the economy of it really struck me. A lot of founders spend a lot of time thinking really hard about pitch deck design, and I know a lot of work went into this deck, but the way that you really just cut to the chase with things here really stood out to me. So I'm really excited to see how you pitch it, and then really excited also to talk more about how you got to this point and what you built on to get here.
Absolutely. Thank you for having me, Jeremy. I really appreciate it. And you're right. This was actually not the original deck that I started working on, and I wrung my hands over visual design for several months before coming to building this deck that I felt was actually more representative of who I am as a founder. And it actually proved to be a really good litmus test. People either opted into it or opted out of it, probably because of that simplicity and economy in either direction. So I'm excited to pitch it to you.
Yeah, let's get to it.
Awesome. So I know you're busy and I'm busy. So I made a different kind of deck for us. I've done my homework and I wouldn't have asked you to spend some time with me if I didn't think that Edify would be interesting to you. So I want to walk you through why I believe I have the best solution to one of the most painful and expensive problems in engineering. And I want you to tell me when you don't believe me. Then we can talk about it. And if you don't want to keep talking about it, we can say goodbye. If that sounds good, then we can go ahead and move forward. All right. So most people can agree that employee churn is awful. It's expensive, but I don't think they realize exactly how expensive and painful employee churn, specifically in engineering, can be. So here's a few things to consider. So first, a third of new hires begin looking for a new job before they're even done onboarding. Second, engineers have 2 times the overall turnover rate of non-engineering employees. And finally, on average, engineers only stay with a company for 18 months. That means that churn costs organizations up to 3 times an employee's salary. And for the engineering industry alone, it costs $22 billion a year. It's a massive problem, and COVID has only exacerbated these challenges as teams are trying to be productive in a remote world. So the industry thinks that you can solve churn with more ping pong tables, more snacks, and higher salaries, but you can't. Churn is actually the result of low productivity and low engagement, which come from broken knowledge flow. When knowledge flow is broken because tools or processes don't work, or there are toxic dynamics in a team, that team can't become productive or successful. That means that knowledge flow is the true root problem of churn. For my customers, this looks like watching their new hires thrash for months, wasting their time, wasting the time of senior engineers on the team. Managers run out of that time to check up on their new hires and ensure they're progressing. New hires fall through the cracks, and teams repeat this again and again, only to see many of their new hires leave. So solving for churn starts with solving for knowledge flow. There's a mismatch in what teams need as they scale and the tools that they have available to them. Those tools aren't working because they aren't optimized for engineering knowledge flow. So we fix broken knowledge flow by fixing shitty onboarding. Good onboarding leads to good business results. 69% of new hires who get onboarded well will stay for 3 or more years, and standardized onboarding will lead to 50% more productivity for the team. Once you fix onboarding, you can use machine learning and AI to anticipate the knowledge flow needs of an engineering team, connecting the data dots from every platform they use so they can be the world-class team you thought you invested in. So Edi is the best solution for engineering onboarding because it's for engineering, not for corporate onboarding. We're built with knowledge flow and learning science best practices. And finally, we're validated with customers who tell us they've been waiting for Edify for years. Edi is our engineering onboarding Slackbot. You can think of Edi as the intelligent in-workflow tool that automates the repetitive tasks of technical onboarding while creating space for human connections in a team. Edi doesn't require users to log in and out of dozens of other tools. We sit right inside the tools that they use every day. We've taken 6 years of validated methodology to produce a framework that we call the Learning Touchpoint Matrix. It covers 400 different points that all software engineers need to know, all coded by when a new hire should be expected to perform on that knowledge and how they should be exposed to it. So Edi is leveraging intelligent automation, chat, and AI in the people side of engineering team management by offering pre-configured, customizable technical onboarding plans automatic and context-driven connections to team members, easy manager reporting, seamless documentation maintenance, and the ability to convert from onboarding new hire to continuous learner. As the team uses Eddy, Eddy gets smarter, automatically collecting new information and keeping documentation up to date. Eddy can even suggest subject matter experts, the right documentation, and more. The data that Eddy helps to capture, manage, and share will be the foundation of our vision to be the operating system for high-performing engineering teams across the world. But with everything becoming software, all teams becoming remote, and the upcoming hiring surge, we need to solve engineering churn. The future is contingent on software engineering, but the way that we ship software has changed dramatically. I think that we've overinvested in DevOps and dev tools while underinvesting in a serious problem, a broken knowledge flow. Today, as engineering teams live with this churn, it's painful and expensive. Today, there are 26.4 million software engineers, and in 10 years, it should be 45 million. 60% of those engineers work in-house instead of freelancing. That means that the tip of the iceberg is that 1 million of those engineers work for companies in Edify's target market, engineering organizations with 50 plus engineers on staff. At our target ACV of $1,000 per engineer per year, we're working toward a $1 billion opportunity. If we don't onboard them, they're going to churn out and the money you invested in those teams will burn. Edify isn't just the best, we're the only. Edify is learning science-based, built for seamless knowledge flow, self-improves the more a team uses it, and offers actionable insights to both managers and new hires. In stark contrast, our competition is risk management centered and isn't made for engineering teams. HR and productivity tools don't understand the complexity of engineering onboarding, and developer tools aren't built for easy knowledge transfer, and they become stale almost immediately. There's a hole in the market that we're the first to fill. Edify wins because we're solving the root problem of churn, how knowledge flows in an engineering organization. Edify is a SaaS business with a land and expand go-to-market, starting with one engineering manager and expanding within the organization into multiple teams as an enterprise product. Today, we have a free plan and a premium plan at $45 a month per team, but in the future, we'll be able to charge up to $1,000 per engineer per year, and we'll be able to do this because of the value Eddy offers today and the expansion of our feature set that will make Eddy a tool teams won't give up. We know that this is possible because we've had years of experience selling complex deals at very high price tags, so we know what engineering teams will pay for a solution like Edify. Our team has built companies, managed mergers, and led teams to exits. I began building engineering onboarding programs first for software teams at AWS Elemental, and then dozens more. And over the last 6 years, I've helped to onboard thousands of engineers. I'm a recognized expert in remote and co-located engineering onboarding, and I teach and speak frequently for O'Reilly and code schools. We have a team including Jamie Rabenberg running our product, Karen Callahan on operations, and we recently hired our CTO, Kate Farmer, who joins our engineers, Nadkan and Joel. Our team and advisors join us from Puppet, Alibaba, Meetup, New Relic, GitHub, Atlassian, and more. The market is huge. We have the solution that customers have been trying to hack together for years. We've gone from no code to paying customers in 4 months with 6 years of validated methodology and expertise, all while bootstrapping. For our beta, which opened August 17th, with a purposefully small set of customers, we have teams from Outreach, DataWire, Puppet, and more. We are raising a seed round of $2 million. We've raised 1.66 so far with an additional 500 in commitments, and we're ready to scale. This raise will enable us to launch out of beta and into GA on Slack first, and then onto Microsoft Teams, allowing us to double our market size by reaching enterprises who aren't using Slack. We'll keep our customer acquisition costs low by leveraging the onboard yourself version of Eddy in our junior engineering community, and continuing to offer Eddy for free for small teams. Our upcoming feature releases are exactly what customers are asking for, and we predict they will lower projected customer churn from 20 to 10%. These accomplishments will help us reach 1 million in ARR in 18 months. So you're still here, so let's talk what questions do you have about Edify.
All right, Kristen, thank you. Now, all right, now we can take a pause from pitching, but I do want to ask you, have you, out of however many investors you spoke to over the course of your fundraising journey, how often did you give the straight pitch? Just like,
That's a great
start to
question.
finish all the way through?
Yeah, not frequently, to be honest. This is more of like a demo day pitch deck style, run straight through. And that's not really how I prefer to pitch. I'm really used to actually speaking at conferences and teaching. And so I like to be very conversational. So actually, when I do use the slides, or when I did use the slides during an investor conversation, I could pause and ask them questions. I would ask things like, have you seen this in your portfolio companies? And this is actually my sales background coming out. The more you can get someone to agree with you, the more they get on your same page, right? And it also gives me a chance to like stop the conversation if this isn't right. If somebody fundamentally disagrees with the premise of Edify, then obviously they're not going to be a good investor to us. So, and I didn't ever have that, but I definitely reached points I can think of 2 conversations where they just said, I don't really think that this is the right thing, because now that I understand it more, we have a competitive company in our portfolio. And we were able to just say, okay, great. Well, it was great to meet you. You can have 30 minutes of your time back. Good luck, right?
Yeah.
Which is totally fine. And I wish that more founders would be comfortable and investors too, just saying like, this is not the right use of our time, you know?
I can tell that it's inherent in the company in some ways about being very comfortable, being very comfortable, ensuring everyone is using making the most use of their time. It's part of the product. I can tell it's part of your personality, and it's obviously goes right into the deck.
Yeah.
And really, that's one of the things that struck me about the deck is I could tell right away that this was a deck that was meant to be read. It was a deck that assumed correctly in most cases that investors are going to preview the deck in Gmail or Superhuman real quick. They're going to swipe through, a few seconds a slide, and you need to make sure that they take away whatever single message you're sending in any given slide. And then, so you're already assuming some level of a shared foundation and then adding to it where necessary.
Absolutely. It's funny that you say that too, because I most of the time would send my deck out via DocSend, so I could get actually some numbers on how many slides did somebody read and how long did it take them. And so the last time I checked the DocSend stats, most people spent no more than 2 minutes on the whole deck, but they actually got through the whole deck most of the time. So, which is not what DocSend's own data says about most seed decks. So I think that people were willing to just like read it really quickly, click through, and decide, yes, I want to meet with her, or no, I don't want to meet with her.
Yeah, it's when they open the deck, I think a lot of investors, they both say, they're not only they're saying to themselves, am I even going to finish this deck?
Right.
At all. And in some ways it can be like a binary outcome where if they finish it, that's a pretty good signal. Were there any particular slides that you did see a lot of focus either in the DocSend data or when you pitched? What usually attracted the most conversation?
Yeah, you can actually see how much time somebody spent hovering on a particular slide. People spend a lot of time on traction, and they spend a lot of time on our team slide, and they spend a lot of time on the slide where we talk about the actual product itself.
So that's the Eddie is a smart onboarding for engineering teams. Could you also see how many people clicked through to the demo video at the end?
Yes. Yeah. So I would say about 50% of the time people clicked the demo.
So 50% of the time when they made it to the end, 50% of the time they clicked through the demo.
Right.
That's fascinating. Did you ever have a version of the deck where the video was in the slide deck, or were you sending out emails where you also had a link?
Yeah, so I did. There was a time, probably 2 or 3 weeks, where the demo was actually under construction. We were refilming it, and so I took the link out of the pitch deck because I didn't want people to see the old version of the product, and I sent the new link separately when we had it available. And so, unfortunately, I wasn't able to get data on whether or not they watched it. But most of the time, you asked at the beginning, how many times did I actually pitch this deck straight through like this? And probably can count on one hand the number of times I did that. But frequently what I found with this deck was that people came to the meetings prepared.
Yes.
And it just gave us an opportunity for them to ask really specific questions really quickly. And so I raised, my seed fund on 30-minute investor meetings, because I think people were very clear about what's happening with Edify. And this is obviously not part of the pitch deck either, but I pushed investors to say, do you want to have a second conversation in the first conversation, which is also another sales habit, right? And I would get them to say, I would ask them questions, do you think that this is the type of company that your fund would invest in at this stage with these round dynamics? And if not, that's okay, but I just want to know.
Yeah, that's fascinating, because I think it's the nature of a lot of investors to keep their options open. And so they never want, they never want to say no. They're always like, let me know when you've got traction this, or let me know when you've hit milestone Y. And then, we'll circle back, buzzword, buzz phrase.
Right, exactly. And I found that, to be honest, being upfront with people and just telling them, I looked at your portfolio and you invest only in companies that have $1 million in ARR. I don't have that. Are you sure you want to take this meeting? Those sorts of things. And people sometimes would tell me no, like on email, right? It's like, okay, well then, but I want to be on your, quarterly update list, that's harmless, right? That is not taking time from me. But when it's like, let's have a meeting to talk about the thing that I don't have that you want, and that's 30 minutes taken from me that I can't get back.
Yeah, it's fast. You're pre-qualifying for good investors, essentially. And one more thing I want to tap on, and then we're going to move on to a special segment, which is a little bit more about your emailing and your outreach strategy. Do you keep track of how many meetings were via cold emails versus warm intros? And what did you see as you performed, investor outreach?
Yeah, absolutely. So I went through, basically I had a really, what I think was architected process. So I spent probably almost 6 months prior to actually starting my fundraise on September 1st last year, where I was just shopping the deck to friendly investors. So that was basically people that my mentors connected with me. And that they could say, I wouldn't continue reading this deck because of why, right? Or this is not interesting to me, or that doesn't make sense. And that's how I got through my first kind of iteration of the deck that I ended up not using, but that information went into this second deck. So what I found was that kind of primed my ability to talk to people that were warm at the beginning and that had some reason to connect with me because it was some mutual connection. But I also did a ton of cold outreach, and that really just came from basically like data mining, right? Like pulling lists of funds and investors that met my criteria. Are they B2B? Are they SaaS? Most of the time I actually didn't pitch folks that are funds that were, sector agnostic. I actually wanted them to be developer centered or B2B centered, enterprise software centered. And I pitched a lot of cold emails, right? And did follow-ups, which is the same that you would do with a customer that you were cold pitching. And if I followed up twice and didn't hear anything, then I put them into the not interested pile. And I actually ran my process in a HubSpot pipeline. I've since moved my fundraising CRM to Airtable, but I can see, these are the people that I cold pitched. These are the ones that moved into meetings. These are the ones that moved into diligence, those sorts of things.
Can I ask why you moved from HubSpot to Airtable?
HubSpot was just too expensive, to be honest.
Don't they have a lot of free features?
I'm sorry?
Don't they have a pretty nice free tier?
They do, but we actually had sort of graduated out of it for what I was using it for. And so we found that Airtable actually was more user-friendly for what we were trying to do than HubSpot was.
Yeah, that makes a lot of sense to me. I write about this all the time in my Substack. One last thing on this: did you have a good hit rate on cold emails, or did most of your investments come from warm intros?
That's a really good question. I should do the analysis on that, but I had a really good hit rate of actually getting meetings out of cold
Mhm.
emails, but the majority of there's only one investor that was a cold connection, or not cold even connection, but cold outreach from me that ended up investing in Edify. But I
That's
got a
interesting.
lot of meetings out of the cold pitches.
Yeah, were the meetings helpful?
I think they were. I think I would say probably 70% of those meetings went on to be a sort of not this time, next time, versus
Mm,
30% of them being like, this is just not interesting to us. And I think that part of that was, if I went back and looked at that 30%, those are most likely, if I had to guess, those are the more sector agnostic groups, or they're the ones that I didn't do as tight of research on, that maybe they invested in something that was similar, or something that's like potentially in the same wheelhouse. And so it feels scary to them. Because that's what I would hear out of some of those meetings.
got it. All right. Well, we've got a little bit of time left, and this is the part I've been really excited about because this is something that we almost never get to see, which is the deck that preceded this deck. So I'm going to move us over to that. Now, you mentioned that a September timeline. When was this deck put together?
Gosh, so the first iteration of that deck was probably in May.
May 2020.
Yeah.
Yeah. So obviously, I'm not going to ask you to pitch it, but let's walk through it a little
Yeah.
bit. And I want to, and let's talk a little bit about some of the choices you made. So this time, in the previous version of the deck, we can see you started with you, just straight up you. What were you thinking? And then what led you to make the change to the full team slide where you're just one part of it near the back of the deck?
Yeah, very good question. And this was, I'm pretty sure it was 50%, 50-50 mentors who thought I should do it this way, and mentors who thought I should do it the way that I ended up doing it with the team. And the reason for that may not always be super clear, is that I had another business for 6 years prior to starting this business, and it's in the same area. So I have all of this consulting experience. And I would say the 50% of mentors that wanted me to highlight that felt like that was the story, right? That I was the right founder for this problem. And I don't dispute that. I think I'm the right founder for this problem, but I felt like we actually needed to draw from the strengths of our team and try to actually not emphasize the consulting, right? And emphasize this is a software product. We happen to have the right expertise in this area, which is why I ended up switching away from it, and switching more toward talking about the problem space and then the solution.
It's funny you mentioned the consulting piece of it because I've seen, I've seen another deck like this recently where it leads with like there's a team in place, but it leads with the solo founder. And I think there's an unconscious bias that this sort of slide taps into, that it's the dirty words in VC lifestyle business, where
Yes.
this is the person at the center of everything. And if they're not there, then nothing makes sense.
Right. And I think you're getting into some underlying stuff about storytelling, right? I think founders need to realize that all of this is just a story, right? This is just theater, and it's a story that you tell, and you can tell this story like 500 different ways.
Mm-hmm.
And if I told you a story that was like, I was a consultant who made millions of dollars doing this, and I'm the one with all the brains on this, then you could very well think, well, how is she really going to productize it, right? How is she really going to get herself out of this, customer delivery flow? And I don't want you to think that. I want you to be super dazzled by this software that we have built, right?
Absolutely.
So it's just same information, just fed differently.
Yeah. So let's move on to a few more slides. So then you lead into a similar structure that you were using in the first deck where you identified churn as a problem. The text is a little bit smaller, so we can see how you called out some of the key information in the deck that ended up getting pitched, as opposed to, so this was what you ended up going with,
Right.
as opposed to this version where it's a little bit more buried, and instead you focused on these more visual elements. And tell me if I'm wrong, but I'm guessing that these did not grab attention the way you wanted it to.
No, not at all. I would have people, when I practice pitched this particular slide, people later on in the same conversation would ask me a question that had been answered on the slide. And then, from a learning and development background, if somebody asks you something that you just told them, then you failed, right? And so I knew that I needed to fix it and make it more clear.
Yeah, the deck has the look of polish, but it's not communicating the message you needed to communicate.
Right.
Yeah, and I'm guessing we're seeing something similar here where you're communicating the same thing, but again, it's buried in this visual, in some visual noise here.
Exactly.
Yeah, and then we can see the structure has continued. We can see again that you have the structure in place, but it's still not breaking through the noise. Like for example, in the solution slide, we have led with something that might have been better to just lead with this next slide where it's actually got the product in it.
Right.
And then we moved on to the why now slide. Now, this is interesting because usually it is nice to visually communicate something about the market, and this is what you did in this version of the deck. In the version that ended up getting pitched, you didn't do that, but you were like just straight up front about what the math was and what the market looked like, and you split it up in an interesting, in I believe an interesting way. So I think this was the slide I was looking for. Yeah. What went into the decision to go from this slide to what you ended up pitching?
Well, to be honest, it was also, thinking about the fact that investors are probably looking at this exact slide hundreds of times a day or a week. And there's nothing in particular about this slide that feels differentiated and specific to Edify. And so again, from a sales perspective, you need to differentiate yourself and you need to make the information clear. There's still a lot of text on this page, and there's two visuals that communicate different things. But if you're just glancing and you're going to spend 5 seconds on the slide, then it's like, okay, what is 45 million? What is 26.4 million? I don't really understand how these all connect to one another. So in the other slide, I just picked the most important critical pieces of information and made them big. I'm sure that like a major design studio might disagree with me, but I'm probably making a lot of visual designers really upset right now.
I hope not. I mean, everyone's got their own style.
Yeah.
And this one worked.
And this is, I might add here too, like I feel like I could have paid somebody to make my deck beautiful, but I didn't have that money, right? And it wouldn't have been the right spend of money either, because you always have to ask yourself, what are the business outcomes going to be when I make an investment? And a business outcome can't really be so unclear as like maybe visual design will help me get more investment, right? Yeah. It's never going to be the deck, in my experience, that gets somebody investment. So let's just not invest too hard in the deck either.
Yeah. So the deck gets you the meeting at most. So you broke out of the TAM, SAM, SOM checkbox style and just identified the big numbers. And then here is a slide that, if I'm not mistaken, just did not make it into the final version. It really didn't.
Yeah. And this slide itself, I actually was really sad to lose, but I made the decision that I should lose it because it's a lot of information, and it actually makes for better conversation. So of course, in all of my pitches that I think went well, everybody asks, okay, who are your competitors? And I can call up all of these names by memory, right? So I don't need to show them visually, we can just talk about them, right? And so this slide even went through a couple of iterations. I initially had it on a sort of a grid, like a heat map of, these tools are more learning and development tools. These tools are more dev productivity. those sorts of things. These ones are more HR. And so that's where you see these three circles here: dev tools, dev productivity, and HR tech. And I was also feeling like when I did this practice pitch on this slide, people still kind of thought, well, like, are you in HR tech? Because you brought it up, right? And we're not in HR tech, right? And I needed to really make that clear that we sell into engineering. We're a dev tool or a dev productivity company.
Yeah, so it's getting in the way of making clear what your value proposition is.
Right.
Plus, since you're targeting, you specifically said you wanted to target investors who are familiar with dev tools, and they kind of already know some of this. Like,
right.
Like you said, you left it for conversation. You didn't need to call it out. You were confident enough that you could almost imply the existence.
Totally. And if, there's one line in my pitch of like, basically the tools that developers have access to today are not the right tools because they're not made for this job to be done, right? And so you would have to be, if there just wouldn't be an investor who invests in developer tools who doesn't know about Jira and Confluence, right?
Absolutely.
Or GitHub.
Yeah. So we move ahead, and I don't recall if you got specific about the go-to-market strategy in the final deck. I think you had the pricing in there, you had the growing team pricing in there, but the rest of this stuff, were you also leaving it to conversation again?
I did. And I have to admit that the model and go-to-market slide in the deck that I did pitch, I think that is the weakest slide of the whole deck. Because it was the most confusing. I mean, especially where I have the $45 a month, and then the next number you see is $1,000 a year. That was not clear, right? That there's this free premium enterprise, and people were like, whoa, that's a big jump from 45 to 1,000. What does that mean? And so I think it did enough of a job to open up a conversation, right? It was plausible enough, but it wasn't, if I had it to do over, I would have spent more time on this particular slide.
Yeah, it's like I've seen pricing. I've seen both of these prices for dev tools for different go-to-market strategies. So either one is plausible.
Right.
Have you discovered a better way yet to talk about this, or are you still working through it?
I'm still working through it, but because we are still exploring different pricing options too. But I think that actually this is where some conventional wisdom, like returning to conventional wisdom, where it's like, here's your free tier, here's what's in free, here's your premium, and here's your enterprise. That just is a model that people understand, and it makes sense.
Yeah, absolutely. And then after that slide, we come to the event. Oh, yes, this is I believe it is the exact same, almost the exact same team slide that eventually made it into the final version. So we can probably just skip over that. And then we get to the early traction slide. Did you have any pushback on this one in particular? Because this one honestly looks pretty good to me.
Yeah, I mean, there would be a few people who, I think not so bluntly, but I definitely heard like, I don't really care how long it took you from code, no code to customers. I thought that was impressive personally, but maybe it's not. So that felt like a data point, I think, to some people that wasn't that interesting, probably because investors really are looking for outcomes. So like the length of time it took you is not that interesting.
I don't know. I think there's an argument to be made that one, evidence that you can ship pretty quickly, and two, there is some bias out there about, oh, you've been at it for 2 or 3 years, and now you're finally here. What were you doing all that time? Especially if there was ever any point, and this where you were in this case, where you were doing consulting, and then you said, no, let's do a product. You don't want to get it confused.
Right. Yeah. That is one of the reasons I did keep the 4 months, was because I wanted people to realize, it's not like I've been dabbling in software for 6 years and now we're suddenly a software company. It's like, no, this was a new idea. It's a new company, and it was actually shipped really quickly.
Yeah, it was specific to your needs. And then the seed raise, I think pretty clear what you were, getting at. Was there anything you, maybe just double check quickly if there was
any. I don't think there were any major changes here. I would actually, what I usually would do here, I would customize like throughout the raise when it's like, okay, well now we have our $1 million lead investor. I would say that, or Atlassian Ventures came in, so I would say that, right? So you would say more relevant things.
I think it is. sorry, I do think it is a little bit easier to note the like the $1 million ARR milestone in the version you ended up pitching,
Yeah.
which was likely the right move, since investors are looking for, like you say, they're looking at outcomes, they're looking at real business outcomes.
Right.
Yeah. And then I believe that was the end of the, yes, that was the end. There was an appendix as well, but we can skip that. But this, this was really amazing. Again, can't thank you enough. I don't think founders get to see this level of exploration into pitch deck construction that we just got to see here.
Yeah, I appreciate the opportunity to share it with you. I think, if I could offer some unsolicited
Please.
advice to people, I see a lot of people kind of messing around with whether or not they're going to fundraise or how much they're going to fundraise and who they talk to. And they talk to, and I did some of this too, actually. I can think of a few investors that I sort of tried to soft pitch to get practice before I was raising in September. And I kind of lost my chance to pitch to them again because they weren't as friendly as I thought they were, even though they were warm investors or warm connections. And I just think, you should decide when you're going to do it, how you're going to do it, and then put a 3 or 4 month timeline around it. Don't let it drag on. Just do it, right? Let this be the only thing that you work on in the business, and delegate to the rest of your team.
So you're a time-bound fundraiser. That's your style.
Yeah. I mean, I hear sometimes founders who are like, well, we've been raising our $1 million seed for the last year. And it's like, holy shit.
Nah,
So
you're not raising anymore.
You're not raising anymore. Like, what are you doing? And really, again, speaking to the efficiency stuff, like your job, at least the way that I see my job, is to prove that Edify deserves to exist right now. That we must have a really big chip on our shoulder and we must work very quickly. And that includes in fundraising.
Yeah, absolutely. All right. Well, thank you again, Kristen. Is there anything else? I know you just gave, no, yeah.
No, that's it.
Yeah, again, this was wonderful. Thank you so much.
Absolutely.
All right, take care. And you can find Edify at getedify.co.
That's right.
Yes. All right. Fantastic. Well, thank you so much.
You're welcome.